Recently on this channel, I have brought you stocks like Kraken Robotics. It was my #1 stock pick for 2024. So far, it is up 65% in 1 year. ADF Group, I caught on the way up. After my video in December, they are now up over 50%. And then Enterprise Group, after introducing them to my channel at 40 cents, now up 134%, making my #4 pick for 2024 Canadian stocks video. So I'm going to try it again. Recently, I had on a live stream 3 penny stocks that I wanted to introduce to my channel. I wanted to find the next Canadian penny stock that was going to deliver shareholders nice returns. And that's what you're going to get from me again today. I am looking at Grey Wolf Animal Health, trading under the ticker WOLF on the TSX Venture Exchange. I'm going to talk about the rewards. I'm going to talk about the risks. I'm going to talk about what this company does and take a quick look at the financials. You are watching Common Sense Investing. My name is Cameron. Let's go find a great penny stock. So let's start here with what they do. This is their website, Grey Wolf Animal Health. They are here for animals and for you. And I know they're speaking to people like vets who are looking to buy their products, but I feel like they're almost speaking to investors as well. Because while vets might look at this product page and see a nice diverse range of products they could purchase, I look at this as an investor and see multiple revenue streams. This includes things such as pharmaceuticals, wound care products, nutraceuticals, and disposables. And we could summarize all these products into 2 streams of revenue, providing Canadian veterinarians and pet owners with innovative animal health products, including their pharmaceutical portfolio and their non-pharma portfolio. Down below, they have companion animals and equine. They bought Trutina Pharmacy, which specializes in equine horses, right? So if you're interested in the track, if you're willing to go research this industry, it might help you understand Grey Wolf Animal Health. But what I want to focus on today is this one specific slide, investment highlights, where Grey Wolf Animal Health is trying to convince you to become a shareholder. Is this accurate? They're talking about a historically resilient industry, strong organic growth, completing acquisitions, and then a solid financial position to drive more growth. I want to go shit test this and see if it's correct or not. Let's start with the industry, where they're talking about Canadian household pet spending grew at a 17-year compounded annual growth rate of 6.9%. They are saying that pets are increasingly viewed as members of the family. There's a favorable demographic with people getting more pets. There's a humanization of pets and a growing trend towards personalized medicine driving the need for specialized formulations and dosing. I actually feel like they're forgetting something from this slide, which is insurance. So I recently took some of my pets to the vet, and everybody in there, like 80% of people, all had insurance. The place was rockin' busy. And I was asking myself, how come it's so busy? Why are so many people going to the vet? And then I realized, waiting in line, everybody ahead of me just had their insurance card, right? So I do see, at least personally, that this industry is growing. I will give them a check mark here. I am very bullish on the pet care industry, on the animal industry. I think it only goes up from here. Their growth strategy. So they're saying they already have a leveraged, established portfolio of products. They're developing their business. They did just cut some costs. They're doing more product development. And then on the other side is strategic acquisitions. Is this happening? So kind of. This company was founded in 2015. They acquired VHS in 2018. They acquired Trutina in 2021. And then they went public on the TSX Venture Exchange in 2022, November 23rd of 2022. So a lot of these acquisitions and a lot of this growth happened before they became a publicly traded stock. And I want to say, thank you. Thank you. I get so tired of these companies that basically become publicly traded stocks before they have anything, before they have a product. They've just got an idea that they want to sell to shareholders, and they become traded to basically beg for capital on their idea. This is not Grey Wolf Animal Health, right? They had products before they became a publicly traded company. If you look at their numbers, September 30th, 2022, revenue of $17 million, they were already EBITDA positive before they became a stock on the stock market. Now, looking at this, their organic growth, revenue increased year over year by 12.4%. Gross profit increased year over year by 8.3%. Adjusted EBITDA increased 25.8% to just under 1 million. Gross profit percentage close to 50%. Those are the organic numbers that we're looking at because they have not had an acquisition in a while. This is our base. They have a big long investor deck trying to convince you to become a shareholder. But I do love this slide, right? Success story, medical pet shirts. This is one of the things the Gray Health Animal Health is involved in. Instead of animals using cones after surgeries, they have shirts where recovery doesn't have to be so stressful. I think that's fantastically innovative. And that puts me here. Historically resilient industry, yes, big green check mark. Strong organic growth, yeah, not bad. 12%, 8%, 25%. That's not bad. Completed 2 acquisitions. Sure, that's great. It was a while ago. So let's look and see their financial position. Can it drive growth like they're saying it can? And as always, make sure you go straight to the source. I'm going to look at their most recent management discussion as well as their condensed consolidated financial statements. Their highlights from their most recent earnings, which was September 30th, 2023. We've already talked about most of these. Total revenue increased by 12.4%. Gross margins were 49.2%. Adjusted EBITDA was $1 million. What I want to talk about right now is cash. The company completed the quarter with cash of $8 million, an increase of $1.1 million compared to the year ended. The company's cash levels were mostly impacted by an increase in cash provided by operating activities. So not share dilution or financing or anything else, right? Operating activities. In addition, the company repaid borrowings of $200,000 in the quarter and $0.7 million since December 31st, 2022. Looking at their quarter-over-quarter numbers, this is a tale of 2 different companies. So do not forget, this is approximately when they became a publicly traded company. And you could see up to that point, they had some negative income numbers. Once they became publicly traded, they had some one-time net income. But since that time, they have been a positive net income company and hopefully growing. Assets over liabilities, they have 14.6 million of current assets. They have 23 million of goodwill and intangible I don't really like, for a total of 40 million total assets. If we go down to their total liabilities, 14.7 million. And I will read this. As of September 30th, 2023, Gray Wolf had outstanding borrowings of 9.4 million, 1.1 million current, 8.3 million non-current. On August 25th, 2021, the company entered into an $11.5 million financing arrangement with CWB Maxium Financial. The loan bears a fixed interest rate of 4% per annum on $10 million and 10% per annum on the remaining $1.5 million. The loan is secured and initially repayable in 60 equal monthly installments of $120,742. So good and growing assets, and I think manageable debt. And that puts me here. Gray Wolf is trying to convince us to become shareholders. These are their investment highlights. Everything checks out. I mean, I'm more interested and excited by the industry than maybe I am by their $9.4 million of debt. But overall, yes, sound balance sheet, cash positive. They have organic growth. This is a company I definitely am going to put on my watch list. So let's talk about the rewards and the risks of Gray Wolf Animal Health moving forward. Now, number one, don't forget, this is not financial advice. That's not what this channel was designed to do. This is a channel that educates people on how to invest in microcaps and penny stocks. This is just my opinion. I'm not here to sit and talk about buy, sell, or hold alerts. That is not what I do. This is good communication about stocks. What I am is not a shareholder of any of the stocks that I talk about on my channel. That leaves me being unbiased, as well as you know that I'm not making money if share price goes up, and I'm not making money if share price goes down. And if you want to continue doing that, down below in the pinned comment, I will have a link to my free Discord, as well as I have a paid Patreon. $3 per month gets you access to 100% of my content. Green flags. The rewards, the potential rewards of Gray Wolf Animal Health. I mean, number one, cash positive and profitable, right? This is what everybody is looking for in 2024. They don't want companies that are diluting shareholders or going into further debt. We're looking for these companies that can finance themselves. That looks to be Gray Wolf Animal Health. They seem to be well managed. I mean, I can't say enough about a company that actually is making revenue, is actually positive EBITDA before they become a publicly traded stock, where they're like, okay, we have a product. We now need the capital to grow. Let's hit the stock market for that capital. That is how it should be done. Not all these garbage pre-revenue stocks that are basically lottery tickets. 99% of them or more fail. This is a real company, right? Good industry. I'm excited about the animal industry. I think there's just more and more money being spent on animals these days. It's getting noticed. Share price has gone up recently. that's also maybe a red flag, right? But people are looking at Grey Wolf Animal Health. They also have potential growth through both products and acquisitions, right? So a lot of other companies are waiting for that next big acquisition to grow. Grey Wolf Animal Health can just do that through their growth in their products as well as introducing new products into their system. So they do have multiple ways to grow, multiple ways to succeed. I really like that. For me, and just my opinion, those are the rewards of Grey Wolf Animal Health. The risk, the red flags of Grey Wolf Animal Health, in my opinion, they do have some debt, 9.4 million. This could hold them back a little bit from near-term growth. So remember, they need to stay under what, $10 million on their loan. They have 9.4 million. They're paying that down. It could be a little while before they acquire another company. We're going to have to look for organic growth and product growth. But that is a concern. If you're looking for that next company that could get 50% revenue growth for the next 3 years, that might not happen here. They're getting good growth, good predictable growth that could increase, but it's not fantastic growth. It's not 100%, 200% growth because of that $9.4 million in debt. The share price is also volatile, right? I've showed you the share price on my last video. It's gone up and down a couple times. This company is looking for investors, not traders. Now, as always, this video is just the starting point for your research to figure out whether or not you want to invest in this company, this stock. They have interviews on small cap discoveries, as well as their next earnings are expected to come out in early April before the Bloom Burton conference. Right? So go do some more research. As always, thank you for your time. Thank you for joining me and talking about the next best penny stocks for 2024. I hope to see you again soon.